This segment is going to discuss journal entries required as a result of a bank reconciliation. Recall our example of a bank reconciliation we prepared and reconciled the balance for ABC Company on July 31st between the bank and the books. The very last step in the bank reconciliation process is to record into the general ledger all transactions that we recognize should be recorded as a result of the bank reconciliation. Those transactions will all be on the book side of the reconciliation. Because recall, any reconciling items on the bank side of the reconciliation are already recorded in the general ledger. They just had not been recorded by the bank. So there's nothing more we need to do for these items in the general ledger. However, all of these items down here need to be recorded in the general ledger. They hadn't previously been recorded because the company was not aware of them until the bank statement was received. So in preparing the adjusting entries, it's actually pretty simple to do. Half of the journal entry is already done for each of these items on our behalf. Because if you look at this $30 that we are adding to the cash balance, we know that if we need to add to the cash balance, that journal entry is going to be a debit to cash. Down here for the recording error and the insufficient fund check. Both of these need to be subtracted from the cash in the general ledger. We know that to decrease cash, we credit the account. So both of these transactions are going to involve credits to the cash. So for each of these reconciling items, half of the journal entry is already explained for us. We need to debit cash for 30, credit cash for 28, and credit cash for 225. So now to prepare the journal entries, we know we need to increase cash $30 for interest earned. Interest earned is a revenue, so we're going to credit interest revenue in that entry. Debit cash, credit interest revenue. For the $28 decrease to cash, that was due to a recording error. When we purchased supplies, we didn't decrease cash enough, and we didn't record enough of supplies purchased. So our journal entry will be a decrease to cash of $28 and an increase to supplies, and that corrects the recording error in the general ledger. Finally, we have an insufficient fund check that needs to be decreased from cash. The customer had given us a check. We recorded it as a payment from the customer and a decrease to their receivable. But because we didn't actually get the cash, we need to decrease cash to $225, and we're not going to give up. We're going to put it back into accounts receivable and continue to collect from the customer. So after posting these adjusting entries into the general ledger, these reconciling items that were on the bank statement are now recorded, and the cash account in the general ledger now appears as such. The ending balance agrees with the balance reported on the bank statement.